So I think that gives us a lot to discuss, and I'm now going to invite Creon Butler to chair our panel discussion. Creon is the director of the Global Economy and Finance Programme at Chatham House. Creon, over to you. Thanks.
Well, thank you very much, Katharine, and thanks very much also to the two previous speakers for giving us some excellent material to get our teeth into. First, let me say, before I introduce the panel, that I think this is a really timely event, and it's a very timely report. And the report sets out very clearly the benefits of achieving regulatory coherence and how to do this. Well, Dietrich, I think, has also described in his keynote address the key issues that the FSB is examining, which are actually crucial inputs to achieving that regulatory coherence. But if I might just say one thing, I mean, I think we are all aware that while we have a common view on what we want to achieve, this is not going to be at all easy. And if I could just highlight, I think, two really fundamental issues at the outset, which I think are going to be key in this work in the future. So the first is, what kind of world are we going to be facing in the future? And are the kind of shocks that we've seen in the pandemic going to be more frequent in the future? Whether they arise from climate change or global health or geopolitics. And the second point is, if we are going to be in a different kind of the world to the one we've been in for the last 20 or 30 years, what should the balance be between putting in place measures to make the financial system more robust to such shocks, through more sophisticated stress testing, higher capital buffers, improvements in market infrastructure? And how should that balance reliance on the kind of extraordinary measures that the world's monetary and fiscal authorities put in place over the past years, over the past year? Because these clearly contributed to the success of the regulatory system and continue to do so. So it's obviously unfair to ask our panelists to respond to these questions now, but I think it's just good to keep them in the back of our minds as we have this discussion and as the future work this year continues. So let me now introduce our really excellent panel, and this is in no particular order. But first, I'm delighted to welcome Katharine Braddick. Katharine is Director General of Financial Services at HM Treasury and leads on all aspects of policy for financial services. She's the Treasury's member of the Financial Stability Board and has a wealth of experience in financial regulation in not just in HM Treasury, but also in the Bank of England and the FSA before that. Just below Katharine on my screen is Romain Paserot. And Romain is the Deputy Secretary General at the International Association of Insurance Supervisors. Romain has joined the IAIS in 2016 and currently oversees work on capital and solvency issues, as well as the association's internal operations. And prior to joining the IAIS, he had extensive experience at senior levels in the French insurance supervisory body, the ACPR. If we move right down to the bottom, I have Toshiyuki Miyoshi. Toshiyuki is Deputy Commissioner for International Affairs at the Japan Financial Services Agency, and he currently represents the FSA in various technical committees of the G20 and G7, and also at the Financial Stability Board. Again, he has a wealth of experience in international economic cooperation, working in senior positions in the Japanese Ministry of Finance on infrastructure issues, overseas development, and debt sustainability. And he also helped prepare for the preparations for Japan's G20 presidency in 2019. And last, but certainly by no means least, Tamara Cizeika. Tamara is counsel in the Financial Services Regulatory Group at Allen & Overy, LLP. Where she specializes in regulatory issues in the financial services industry. And over the years, she has been an active participant in key debates affecting the financial services industry. She's contributed in particular industry views on such issues as the retail distribution review and the too big to fail problem. So each panelist will make some brief introductory remarks, focusing on how global regulatory coherence can aid pandemic recovery. I will then ask a few questions to the panelists, but we would then also like to very much to have questions from the audience. And if you would like to ask a question, please use the Q&A tool on the platform. I will then read it out to the panelists and we'll get their responses. We will try and get as many questions as possible in, but we do have a hard finish at 10:55, so we'll just have to see how that goes. So first of all, Katharine, can I pass over to you for your introductory comments?
Thank you very much, Creon, and thanks very much for inviting me to participate in today's discussion. I'm very pleased to have the opportunity to talk about the way in which we anchor our policy making and thinking in the UK to the international system. As we leave the European Union, there's been a lot of discussion about the extent to which the UK will diverge from the EU or plough its own furrow. We always say that we've always been leaders in the international rules-based system for financial services and financial stability, and that will continue to be a priority. But almost always the conversation then moves on to what we're doing in the UK. And so I'm really pleased today to have the opportunity properly to discuss how.
Katharine, I think you've just gone on mute for some reason. If you could unmute.
Sorry, I must have hit my keyboard inadvertently in gesturing in my enthusiasm. It's really good to have the opportunity to talk more meaningfully about how these relationships bear on our thinking and policy making. Before I go on to pick out a few current examples, I want to pay tribute and thank the Japanese government, Japanese colleagues and Japanese regulators in particular for their approach on fragmentation, thinking about the dangers of fragmentation in the system. We have seen the system come under considerable pressure in recent years, the multilateral system for standard setting, and their work there continues to be very important. Dietrich talked about the FSB's work on the non-bank financial sector, and this is the first area that is very current, where our thinking is absolutely in dialogue with work that's going on in FSB. The Financial Policy Committee in the UK has been doing a good deal of work on the non-bank financial system, and particularly in the wake of the severe market liquidity stress that occurred almost exactly 12 months ago, which highlighted some vulnerabilities. We do that work with the Financial Policy Committee, but that work is in dialogue with a very active agenda, as Dietrich outlined at FSB, and that is absolutely essential, not just because you get better analysis if you're doing it with more smart people from all over the world, but because experiences in different jurisdictions expose different kinds of risk, and regulatory approaches in different jurisdictions give us more experience to draw on. And then the FSB provides us with the forum for us to address the differences in those regulatory approaches. And, you know, particularly in this area, the propensity for cross-border spillover means that international coordination and, if necessary, reform is absolutely integral to addressing the financial stability risk. And it's a new area of risk that's arisen since the global financial crisis because of prudential reforms in the banking system. So that's a very important part of that sort of very established and continuing engagement about financial stability. A new area where coordination internationally is essential has been raised both by Dietrich and by Antony, is what you might call sustainable finance, green finance, climate finance. It's incredibly important to us here in the UK. We feel that one of the things we can bring to our co-hosting of COP26 is the UK's expertise in finance, also to our G7 presidency, so we can really integrate the financial system and its role to our climate goals and achieving the climate goals. In November, the Chancellor announced that the UK would make disclosures aligned with the Task Force for Climate-Related Financial Disclosures, TCFD for short. We would make those fully mandatory across the economy by 2025. We're the first country to do that. The TCFD approach was very much led by the FSB. We also set out our plans to implement a green taxonomy, building on the approach that's been very much led and incubated by the European Union. Here again, I think you can see that the only sane approach, the only effective approach is multilateral, is cross-border. It's banal to say that climate change is a problem that doesn't respect borders, but it is absolutely operationally critical in the way we think about it from a finance point of view. We're at a moment where if we want genuinely deep mobile pools of capital to finance the transition to net zero, and for that we need effective risk pricing and asset pricing, we have to establish those norms through some kind of international convergence. And that doesn't mean it's going to be the same everywhere, but it does mean that multilateral engagement is essential to getting that system set up functioning and effective. We also therefore have joined the International Platform on Sustainable Finance, and that's all part of this commitment to international coherence. I know I'm about to run out of time and that we don't have much time, so the other points I would make are around illicit finance. Here again, FATF for many, many years has been a critical part of ensuring that there is a multilateral international approach on on illicit finance, and that informs our economic crime plans in the UK. I didn't even get to the G7, but I imagine that will come up in discussion. So with that, Creon, I will close and have.
Katharine, thank you very much, and thanks for that very good overview of the enormous range of issues that you're tackling. If I can now move next to Romain for your introductory comments. Thank you.
Yeah, so thank you very much. I hope you can hear me well. And first of all, thank you very much for your invitation to speak today and to provide the IAIS perspective on this very important topic. I know I have a very short time, so it's quite a challenge, but what I would like to do in these opening remarks, maybe it's first of all to look back to 2020. When the COVID-19 crisis happened, it happened actually at what was a turning point for the IAIS. The year before, we finalized the revision of the insurance core principles, which are the global insurance standards. We also delivered an additional layer, the common framework for the supervision of internationally active insurance groups, with some specific requirement for these groups operating cross-border. And we also adopted the holistic framework for the assessment and mitigation of the systemic risk in the global insurance sector, which is providing a more comprehensive and forward-looking approach to the identification of any potential buildup of systemic risk. So in the sense, the COVID-19 crisis came as a real crash test for international standards. And I think that it's fair to say that what we have seen is that they have definitely provided a robust foundation for supervisory cooperation and collaboration during this period of crisis. I would like to give you maybe one example of that. As part of the holistic framework, we do have what we call the global monitoring exercise. It's one of the key pillars of the holistic framework, and this global monitoring exercise builds on two data collection, one coming from a pool of insurance groups and another one coming from market data that our members are sharing with us. And because we adopted this global monitoring exercise, we were in a position to repurpose this exercise to a targeted COVID-19 assessment. And running this exercise last year with our members highlighted the real benefit for supervisors of accessing global data and sharing experience of the vulnerabilities emerging in the insurance sector along the development of this crisis. In December, we published the results, which conclude that despite a significant initial shock to financial markets, the global insurance sector has demonstrated both operational and financial resilience, and that was aided by the supervisory measures providing operational relief, and also, of course, by the monetary and fiscal support measures in financial markets in certain regions. But it's also thanks to all the good work that was done in our previous 5-year strategic plan to deliver these global standards. So now if we look forward to what's coming next, in February, the IAIS published its roadmaps that set out an ambitious work program for the next 2 years during a period of continued uncertainty for the insurance sector, given the ongoing pandemic fallout. And of course, a lot of what I'm going to say will echo what has been already said by other speakers and in the presentation. The roadmap for the IAIS presents a broad range of planned projects, but we can keep them in 4 thematic areas. Firstly, the risk assessment and the maintenance of financial stability. Here we have included our ongoing assessment of potential vulnerabilities arising from the impact of COVID-19. In 2021, we are going to continue to undertake a targeted assessment of the impact of the pandemic on the global insurance sector. And that will be done through this data collection. We have both quantitative but also qualitative components, and with a dialogue with our stakeholders and groups involved in this targeted assessment. We will also undertake our standard global monitoring exercise, which covers an assessment of systemic risk at a sector-wide and individual insurance level. Of course, other risks are still there, some of them even being amplified by the current COVID-19 crisis. And you highlighted in the operational resilience. That's, of course, a very important area. The second thematic area is on delivering and continuing to deliver key post-crisis reforms. This includes the further refinement of the insurance capital standard that we are developing for the solvency assessment of internationally active insurance groups. We enter this year in a 5-year monitoring period where we want to assess the performance of the ICS before moving to a second phase of implementation of the insurance capital standard, which will be as a prescribed capital requirement for IAIGs. So of course, this is very important because within this monitoring period, we are also able to assess the performance of this capital standard, these risk-based group capital standards, in extreme situations like the COVID-19 situation. Earlier this month, we marked an ICS milestone with the completion of the first year of the monitoring period. And with the ICS, along with our other standards, we really try to create a common language for the supervisory discussion of group solvency of internationally active insurance groups, and thus enhance global convergence among group capital standards. And that's certainly a very important tool in delivering the coherence that is at the center of the discussion today. The next thematic area is in supporting members in addressing the risks and opportunities of key trends.
Romain, if I could just ask if you could, I mean, I think we can come back to a number of these issues, but to the extent you could keep it as brief as possible, that would be really good. Thank you.
Yeah, I can conclude in very one remarks. I mean, this next thematic area is really about addressing the type of risk that you discussed, the work on climate risk and sustainability, the supervisory perspectives on the pandemic protection gap, all the measures that are needed to increase operational resilience, and of course, all the issues around digitalization. So that's also a very important area for us, and we have many projects where I think we all benefit from the global perspective and the forum that the IAIS can provide. I look forward to the question. I'm happy to give the floor to you. Sorry.
Not at all, and thank you very much. I mean, I think it gives a very good picture of the excellent work that the association is doing, and I hope we can come back to a number of the points you're making during the discussion. So I'm really sorry to interrupt you, but thank you very much. If I could now go to Toshiyuki, that would be really good. Thank you very much.
Okay, thank you. And first of all, I would like thank you for inviting me for this very important event. And it is my pleasure to speak at this event panel discussion. The launch of the report on promoting regulatory coherence in financial services is very welcome. In fact, as Mr. Manchester said earlier, Japan FSA raised the issue of addressing market fragmentation as one of the priorities of the G20 finance track under the Japanese presidency in 2019. We thought discussing this issue was important because we need to pay special attention to unintended fragmentation, especially in normal non-crisis times. In general, it is easier to build international consensus and coordinate joint action in times of a crisis because there is a shared sense of urgency, but it is hard to maintain such a momentum as the sense of urgency fades. In 2017, 2018, as you can imagine, we have been witnessing some dividing, polarizing trends, not only political, but also in the area of financial regulations. As anti-globalism was on the rise, we felt the need to reaffirm our commitment to maintaining an open financial system. As the rivalry between the EU and the United States intensified in derivatives regulation, other jurisdictions, including Japan, were being sandwiched between the two major powers. In the international banking markets, national supervisors tended to ring-fence capital and liquidity of the subsidiaries of global banks, prioritizing resolution in their own jurisdictions over openness to global businesses. Moreover, a strong voice of concern had been raised at the time about unintended consistencies across jurisdictions in regulation and supervisory practices. This is why now we raised the issue of fragmentation at the G20 and it led to the FSB reports and IOSCO reports on these issues later this year. Japan FSA officials played important roles in this work as chair or co-chairs of the committees in charge. So after this, in response to COVID-19, I think we have been to some extent successful in coordinating the action. For example, Basel Committee on Banking Supervision announced the statements saying that about the postponing of the implementation of Basel III regulation by 1 year. And another statement clarified the use and availability of capital buffers in providing liquidity to the real economy, which is very important for us as financial regulators. So it helped reducing the operational burden of financial institutions and supporting the real economy. And it was also good that the FSB members agreed on the 5 principles mentioned by Dietrich, which underpin the policy measures to be taken by members. In light of inevitable constraints we had in response to the pandemic, it is, frankly speaking, infeasible for us to agree in advance on each and every policy measures in a uniform and binding manner at the time of the crisis. But it is very good in that kind of situation to compare notes and sharing experiences and lessons with each other in a kind international fora such as the FSB or the Basel Committee. I think that this kind of things practices should not be taken lightly. Now I feel the need to address to avoid market fragmentation is increasingly embedded in discussion among regulators. For example, from operational resilience and climate change and cross-border payments or something like this. And Japan FSA is of the view that this continues to be a very important challenge we regulators need to address. In COVID response, as Dietrich mentioned, unwinding coordinated kind of actions on unwinding would be very important. Also, we need to take into account the accumulation of debt and the possible, unviable corporates going forward. And we also think that enhancing resilience of the global financial system by creating a kind of hub network of financial sector could be very important. To this end, perhaps ensure avoiding excessive kind of restrictions on data flow should be avoided. And we are a little bit concerned about the regulatory moves by some jurisdictions on data localization. In some sense, Japan have a free trade agreement with the US and UK on data flow as well. I hope that this kind of more freer data localization rule could be applied more globally. On cybersecurity and climate change, perhaps we need to think about the broader consistency with other sectors as well, not only within the financial sector, but there are lots of stakeholders in other sectors as well, particularly on cybersecurity. Work is underway at the national whole of the economy level, or in terms of gathering information and strengthening resilience. So the financial, the initiatives that in the financial sector needs to be coherent and consistent with this sort of whole of economy efforts. On climate change, we strongly support the initiative by IOSCO and IFAS foundations towards the more comparable a single global standard for comparable and consistent information on sustainability reporting. In some sense, in the absence of these sort of metrics, indicators, and models, perhaps hastily mandating disclosure could be rather not really helpful for investors in terms of providing them with useful information for them.
Toshiyuki,
I will stop here. Thank you.
That's really brilliant. Thank you very much. And I think you've highlighted, for example, the really tricky issue of the way the regulatory agenda interacts with other agendas, such as and we'll come to a question on that, you know, the trade agenda, data flows and things of that kind. And this is one of the most difficult things, I think, to get right, but where coordination is crucial. So if we could come now to the final panelist for your introductory remarks. Tamara, over to you.
Thank you. And thanks also to the City of London team. Sarah, Annette, Patrick, Karina, you've been so impressive in pushing forward the work of the committees I'm on under the pressures of the pandemic, large meetings online, not to mention homeschooling, which, just for speaking for myself, has meant an extra couple of bottles of wine a week in my online shop. But if we needed reminding, they're really a testament to how much talent there is in the city and to its agility and resilience. And that really brings me to my first comment, or rather my first request, which is that the city has an enormous reservoir of talent to draw on in this area. And a lot of us will have seen over the years the contribution made to the city, by the city on EU policy making, the ideas, the energy, the intellectual rigor, the drive. It was a massive asset to the EU in financial services law. And I'm frankly keen to see that deployed in equal measure at the international arena, so that we really move the needle in the next couple of years on the sorts of issues discussed in our report and on climate change and ESG in particular. And I think that really goes to the heart of the paper that we have, that we've written about, which is Global Solutions, Global Problems. Looking back in 20 years' time, personally, I want and hope for us to be able to point to this as the legacy of the UK's G7 presidency. My second request is quite a sensitive one, but I want us to be a real champion and a leader in this area. To illustrate this, I read in a speech 2 days ago, we can and should make changes to tailor regulation so it fits our market better and is more efficient and coherent. I mean, who doesn't agree with that? Of course. And I have tremendous respect for the thinking behind it. But from the perspective of what we're thinking about today, I'd ask other questions. The market for UK firms is global. The businesses regulated in the UK operate globally. We want an opening up, we want market access to other markets. So our market is in fact international and global. And if we think that international standards and international regulatory coherence is a good thing, I'd be pitching our ideas at the international level. If we think something would be more efficient and more coherent, perhaps we make that happen at an international level rather than thinking about it at a local level. That brings me to my third request, which is that we have a lot of questions in the UK at the moment as regards climate change related laws, and Katharine mentioned some of them and others did as well. Do we go with the EU position or do we go it alone? The EU taxonomy is a big case in point that dominates a lot of the discussions and committees I'm on at the moment. And that brings us again back to the thesis of the report. Why do things together with other countries? Why not just do everything on our own? And the answer is, for a lot of international businesses, fragmentation gives commercial, operational and compliance challenges. We've got regulatory arbitrage, we've got increased cost and risk. So on the taxonomy, maybe the ideal scenario is a single international taxonomy where the UK uses the G7 presidency to make real progress on that. Maybe the less ideal for one of my clients who operates in 160 countries is one taxonomy in the EU, one in the UK, one in China, one in the US, and maybe even one in the other 127 countries in which it operates. As a final point, if I have enough time, Creon, I'm going to mention one more thing, which is that I remember attending a Mansion House event a few years ago when we could all meet in person. I think I even kissed people on the cheeks. What a radical idea. And the Bank of England and the Chancellor set out the case for international trade agreements, including services. For me, this is an additional reason, if we needed one, to make a push on international standards and regulatory coherence. Because my personal view, and this may not be shared broadly, I'm not sure, but it's my personal and very deeply held view, that this builds trust between lawmakers, regulators and supervisors internationally and provides the foundation for market access, which to me is in bigger picture terms is a prize worth fighting for.
Tamara, thank you very much. And I think you've set out quite a set of asks from the private sector. and we should have a look at some of those through the discussion. And I'd like to thank all the panelists for their really insightful comments and for also keeping the intervention short. So I've been looking at the questions as they've come in. Actually, many of these questions are much better than my questions. So I'm actually going to go straight to some of the questions we've got through the Q&A books. And if I could start actually with one from Gareth Murphy, who's from Standard Life Aberdeen. And he highlights a really important point, which is that I mean, we all, I think, here are committed to regulatory coherence and to the importance of getting financial regulation right and so on. And yet we know at a political level that there is an enormous range of issues that our political leaders have to deal with in the aftermath of the pandemic and given what's coming in the future in terms of climate change and so on. So how do you get this issue on the political agenda and ensure that it has sufficient attention, particularly when some of the issues that have to be addressed are deeply political? I mean, there are choices about how far you push, your own sort of domestic scope for innovation versus, waiting and working with others to have a standard global approach. And obviously, Katharine, you have this challenge in relation to the G7 coming up. So maybe I could just come to you first on this real question of how do you get political attention for this key issue?
So unfortunately, of course, political attention arrives when there's been a crisis, and that's what we experienced in the global financial crisis. I don't think finance has ever been so high up the international political agenda as it was in that period. But one of the sort of core characteristics of the UK as a jurisdiction is because we have a very large financial services sector, because it has in recent memory presented some quite serious risks to the economy, and because it is also a very productive part of our economy. It's actually never very far from the political agenda, and we less often experience a tension between, I mean, it's so obviously the case for us that participating in an international rules-based system is better for the UK's economy, because it makes a system to which we are very exposed operate in a more transparent and effective way. That said, I mean, I don't want to sound naive about it or to elide the challenges, and it is an area in constant dialogue about the tension between all sorts of different objectives that we have, including between safety and competitiveness and innovation, for example. Sometimes that feels like a tension. Sometimes those things don't go in the same direction, and a tension between domestic requirements and an international debate. I think every jurisdiction represented on this call, every jurisdiction represented at FSB experiences those dynamics in different ways at different times. I think what's so important is the work that Dietrich and his team does in the FSB and in all the standard setters in providing us with a really highly functional theatre in which we can effectively engage on those tensions. There is never a point at which they're going to disappear, in my view. It's more a question about having a really established system.
Thanks. I mean, I think that's very clear that you need to have the solutions available for the politicians to pick up on and run with. And I just wonder if any of the other panelists would just like to comment on this question of how you get political attention for this agenda. Maybe if I could just ask Toshiyuki from because you're also in the government perspective, whether there's anything from, how this works in Japan and any lessons you learned from the G20 presidency that Japan ran successfully in 2019.
Right. From our perspective, for example, climate change, which is becoming a really important issue for Japan as well, because the Prime Minister made an announcement last October that we formally announced that we will aim for net zero by 2050, and lots of activities going on within the Japanese government. So in terms of climate change, political attention is really big. So it's not really a problem. But when it goes to technical problems like cyber risks is also a very important issue. But when it goes to technical things, it is very difficult to attract the politicians' attention. So one thing we could say is that it is good to have a kind of political global fora like the G20, not only the technical body like in the FSB or standard setting bodies, and raise awareness among international politicians on the importance of particular issues, particularly the global issues like health and global health pandemic preparedness or the climate change and others. We raised in the Japan's presidency the issue of aging society, because we are ahead of other countries in terms of aging population, shrinking population. But it's going to be a kind of longer term challenge for most of the countries in the world. So initiating some sort of forward-looking sort of topic at the high-profile international fora, such as the G20, would be very important.
And I think also the importance of connecting, if you like, financial regulation with other issues. We've talked about climate change, but there's also aging and all these questions in a sense that maybe politicians focus on first are also in many ways influenced by what you do in the regulatory space. If I could come now to another question, which is from John Cook, who's chairman of the Notice Committee for the City UK. And this came up a little bit earlier, but his question is, how do panelists view financial regulatory cooperation provisions in trade agreements as a route to tackling financial regulatory issues bilaterally or plurilaterally? So, going back, politicians really do care about trade agreements. So this is one way in. And I don't want to go to our two government representatives straight away. So perhaps Romain and Tamara, I could just ask you for your views on this question, because you obviously have quite a role in influencing how these trade agreements are developed.
Thank you very much. So, well, actually, this is not exactly the role of the IAIS. I mean, the role of the IAIS is really to be a technical body, and what we are trying to do is to develop sound and robust standards for the supervision of insurers, right? And that's quite a full-time job. So, of course, the question of trade agreements, which sometimes come up in the discussion, is a bit separate from what we do. I mean, trying also maybe to make a link with the previous question, I think what the IAIS can do to raise awareness or to deal with issues that are not directly related in this mandate is probably, first of all, to be completely apolitical in the sense that really sticking to our mission, which is to deliver good standards, which are technical and which needs to be built by experts from around the world, etc. And they should have a value for the objective of fostering policyholder protection. And then comes other questions. But I think one aspect of trade agreement and one aspect sometimes in resistance to open your market is the question of the trust that you have in how external actors are going to be supervised and the level of confidence that you can get. So I think coherence in international standard and robustness of international standard and also assessment of the implementation of the standard is really something that can ease the discussion by giving comfort in this perspective, I would say.
Yeah, I think you put your finger on it. In a way, you can help the trade negotiators by saying, look, guys, we can take this issue and deal with it in a certain context, which may be less fraught than your context. And actually, if we do this, then you'll be able to carry forward other aspects of that trade negotiation. I mean, Tamara, I don't know if you have a view on this question as well.
I mean, I think interestingly, there's a sort of an opposite point that the industry can make it harder for Katharine to do her job, or we can make it easier. If there are scandals pressed all over put all over the Sunday press, right, or in the Mirror and the Sun and banker bashing, it makes it harder for politicians and regulators to do what we might otherwise like them to do, which is kind of sometimes fight our corner. So I think there is a bit of that. And I think also populism, the sort of populist surges that we've seen in the last couple of years have not really helped with international regulatory coherence. I think with the Biden presidency, we're really seeing, I think, an opening of opportunity on a whole heap of issues. I was on a seminar, speaking on another seminar only a few days ago, and someone in the US was saying they thought maybe the US would be open to the discussions about an international taxonomy or kind of somehow co-opting with or using the EU taxonomy as a basis. I mean, that would be a massive, massive, massive development, but we need sort of cooler heads to prevail. We don't want sort of bad press to kind of mean that politicians have no capital that they can use to help the industry on stuff that I think we would like. So it's sort of the opposite thing rather than, if that makes sense.
Yeah, thank you very much. I think that's a very clear point. Now, inevitably, there are questions about the UK-EU relationship, and both of these are actually from our media colleagues, Jack Schickler and Lucy McNulty. And the question really is, how is the new EU-UK regulatory forum going to work? How does it contribute to standard setting, to this global objective, and so forth? So, Katharine, I have to come back to you if you could make some responses to the questions on this point, but others may have views as well.
So I can certainly say a little bit about the MOU, although I'm sure not as much as people would like, because of course we're in discussion on it currently. Both sides are committed to concluding an MOU on regulatory cooperation by the end of this month, and I don't see any reason why we're not going to be able to deliver on that commitment. I mean, there's been some exuberant discussion of this MOU, I think, certainly at the turn of the year in the media. This is an administrative vehicle. It's a way for our stakeholders, as much as us and the Commission, to understand the terms and the purpose for our regular engagement. Of course, we can talk to each other all the time. We don't need an MOU in place to do that. We do already. I think the way it connects into these questions of stability and openness is that we've always had the strong view that through a deep dialogue with the European Union about our thinking on regulation and their thinking on regulation, we can have a very clearly managed process for understanding where we are, where we're addressing the same issues in similar ways, where we could learn from each other through addressing them in different ways, and where we can see tensions in those approaches, either through a mismatch in what we're doing or approaching a similar problem in a different way. And all of that is important to ensuring stability, as well as what we would like to achieve, which is stable openness between our markets. That's the goal. I think it's worth observing that it's not just about regulatory cooperation, it's of course about supervisory cooperation, and we already have extensive MOUs and agreements in place between British regulators and European Union regulators that really assures the delivery of the outcome of all that regulatory sort of corpus in terms of actually stable firms, stable relationships between the two jurisdictions. So that's how I would see it coming together.
Katharine, thank you very much. I'll offer the question to anybody else if they would like to make a comment, but equally I would understand if this is an issue they would like to leave to Katharine.
I'll be brave.
You'll be able to be brave. Well, go on.
I think it's quite challenging sometimes for the industry to be watching all of this, because frankly, I want lawmaking to be done on a rigorous cost-benefit analysis and not be driven by politics. I think since I started to do regulation in various different jurisdictions, that seemed to me to be the best possible foundation for good law. And sometimes the sort of the optics of can we be seen to be tracking the EU, or should we be trying to send some kind of message about divergence and increased opportunity? I mean, my personal view is I would prefer those sorts of discussions to kind of be more cost-benefit analysis focused. And I think that probably is a request of the industry, if I can be so bold as to say.
Thank you very much. I think that clearly is a desirable approach. I think everybody would agree that one should look at that aspect. Very good. I wanted to come now to a question which Andrew Churchill has highlighted. He's from Technology Strategy, and this actually goes to two of the issues which were flagged in the report around cybercrime and financial crime. And I think it's a very crucial one. So when you're looking at the sandboxing approach to financial innovation, this is clearly an area in a way that you want to give the scope for different jurisdictions to allow innovative things to happen. but at the same time, you know, that to some extent runs against the goal that we've discussed of regulatory coherence. And I think it would be really good to have perspectives on, particularly on this question of innovation and allowing innovation versus regulatory coherence, and how we get the balance right between the two. I think it potentially affects all of the sectors you're in. So I don't know if, again, maybe if there's anybody who would like to lead on that question. Perhaps again, I'd have to come to Katharine because obviously the UK has been a leader in the sandboxing approach. So it's just this question of how you allow financial innovation, and you give the regulatory scope to do that, but at the same time do that in a way which delivers on regulatory coherence.
Yeah, it's and really, I'm afraid you want the FCA here rather than me on this question, so I'll do my best, but I'm not the expert. I think it requires it requires very sort of attentive establishment of process around the sandbox and a lot of engagement with other regulators. But it's a sort of fairly, it's a statement of the obvious. I think the other point to make, though, is that as industries mature, you need to think again about your sandbox approach. We just had a review here in the UK on fintech, very helpfully supported, in fact, by the corporation. Ron Khalifa led it, and he was, one of the challenges he posed was, a sandbox is great, but then the firms get bigger, and what happens to them when they're, bigger than the sandbox but smaller than other incumbents? How do you think about that regulatory path? And that's certainly a competitiveness issue. It's also a regulatory safety question about maturing sectors. And so I think we have to. Unfortunately, it would be very nice to be able to put a sandbox in place and then consider the problem solved. But the nature of innovation is that that's not the case. You have to keep adjusting your own regulatory approach to check that it is relevant to where the particular sector development.
Katharine, thanks. Would anybody else like to comment on this, either the broader question of innovation and coherence? Romain, would you like to?
Yes, thank you very much. No, I think that's a very, very good question. I don't have the answer to this question. I think this is something that for which you need to be very pragmatical, and of course we know that innovation can take various forms, etc. We are also in a kind of inclusive association where we have different type of situations, right? For instance, in our emerging markets, sometimes innovation is absolutely key in providing insurance products to the customer in the way, because they can change completely the cost aspects of selling products. So there's no clear answer to that. I think we try to build a strong cooperation between our members and try to highlight some principles that should guide them in trying to promote innovation while still providing security to policyholders, etc. And I think there's a lot of question around, as it was said, probably also setting some limits, because once you start to develop your business, then you may have to reconsider what should be in the regulatory sandbox. But at the end of the day, what is very important is to always keep the perspective of clients, of policyholders. I don't think they are prepared to get a different level of security or comfort or protection based on the nature of the player. So sandbox are a good tool to promote innovation. It's a very costly tool also for supervisor, because it's really haute couture. So you cannot rely on the principles and on your regulatory framework. So it's very also costly for them. So this has to be really being balanced by really still providing the level of policyholder protection that you really need to have.
Thank you very much. Yes, Toshiyuki, please come.
Can I say something? Okay, thank you very much. And I agree that there is no clear answers to this kind of question. But at the same time, I could say one or two things. One is that perhaps regulatory needs to bear in mind that we need to be technology neutral when it comes to try to regulate something. And particularly in the cases where there are a few front-runner products, for example, in crypto assets or stable coins, we tend to be particularly focused on the particular technologies or kind of products and try to regulate them. But it may not be a good idea to focus only on these particular products in existence. But we need to be really forward-looking about how we could better regulate a variety of products which could employ a variety of technologies. Important thing is not to put unnecessary impediments to technological innovation, but at the same time, it's a difficult challenge. But it is at the same time, it is very much important for us to bear in mind the concept of user protection and protecting market integrity. So it's a good balance to be made. But anyway.
Thank you very much. I'd like to actually now come to a question which we touched on a little bit before when we're talking about trade agreements, but this is from Zohir Udin, who's in Lloyd's of London, and he has pointed out that it would be highly desirable for there to be greater financial sector openness in China, India, Brazil, and a number of other emerging economies. And I think all of us here would very much support that. The question is, how do you achieve this, and to what extent can regulatory cooperation play in achieving that greater openness? Because, for example, on the Financial Stability Board, the G20, all these countries are represented. You're all having these discussions in the regulatory space, and it does touch on this question of openness. So maybe, Tamara, I could just come to you, whether you have a perspective while others are thinking about this question, because it's obviously crucial to an industry like yours.
Yeah, so I mean, it's the point that I made in my opening remarks at the end, when we were in all these Brexit committees saying, what will we get out of this deal? What will we get out of this deal? I'm going to put my hand up and say, I think we'll get nothing on financial services. And that basically has been the way that it has panned out. And for me, I don't think we're going to see a massive movement on that in the short term. But what we can see is at an international level, a debate and a discussion about how this could be done in a way that people feel comfortable with. And I think that's going to take a period of time and some baby steps. I think regulatory coherence and having a framework for discussing these issues and having confidence in two different countries, having confidence in each other's systems, in the ways that people, customers will be treated in comfort about basically product safety, which is the basis on which I can buy a pram down the road that's made in China, right? So why shouldn't I be able to buy something, a financial services product? What's the difference? There really isn't anything, except the fact that one is super familiar to us because it has been around for a very long time, and the other, for some reason, has kind of had a barrier. And it's a lot of the time it's around licensing. So for me, the way to unlock this is to actually, number one, have a strategy. I think we should be trying to formulate a strategy as to how we can, what's the roadmap from getting from here to there, and it's going to take time and it's going to take some creativity. Secondly, resource being expended on this, time and energy in whatever fora, whether it's FSB or G7 or whatever. And then the third is some real challenging things that I mentioned in my opening remarks around choices. So when we in the UK are looking at things day in, day out about policy choices and lawmaking, can we maybe do this at an international level? Can we do this at a local level? And I'd be saying lean that way.
Brilliant. Thank you. Katharine, yes, please.
I'll just come in very briefly to say a couple of things specifically about India, China, Brazil as examples of what we do. So yes, regulatory engagement, bilateral regulatory engagement is absolutely critical to the pathfinding towards greater openness between markets, and we invest an enormous amount in those bilateral relationships, in particular through events called economic and financial dialogues, where we bring together all our regulators to discuss these issues. They're really, it's a long game often, but it's very, very important as the precursor to liberalisation. I would just want to say very quickly a word about the mutual recognition agreement we are currently negotiating with Switzerland, which is the most ambitious attempt between two jurisdictions to bring together regulators to support stable openness between markets. In other words, to bring together these two quite separate universes of trade liberalisation and regulation in a way that is transparent, coherent, genuinely ambitious, and we hope transformative for the way those markets operate together.
Katharine, thank you very much. Yeah, I think this, it's a good example of how if you make something work between two countries, it can then become, if you like, a model, both for other bilateral relationships, but potentially also for the global system as well. So you can work from both ends. Well, unfortunately, I'm afraid we're out of time. But well, first of all, I'd like to thank our audience for some really good questions. And I'm sorry that we didn't get to everybody, but that I'm afraid is the nature of having a really good discussion. But also particularly to thank our 4 panelists for really some excellent insights into this question, for being very frank whenever possible in responding to questions. And I hope very much that this debate will continue in the future. But let me thank you very much now for everything that you put forward today. And I think it's now my duty to hand over to Katharine. Thank you very much.
Thank you very much, Creon. And I have to say, like you, I'm really sorry that we've run out of time. This has been an absolutely fascinating discussion. Thank you to you for chairing the panel. Thank you to all our speakers and to our audience. Some great questions coming through. You've heard the challenge. You've heard the challenge thrown down today. Now is the moment for us to join efforts globally for pandemic recovery, to promote further coherence, not fragmentation. I hope that this report is a useful contribution to the debate, will be useful both to our domestic and international partners. Look, we look forward to working with you all as we seek to emerge from this challenging time better, stronger and fairer. So thank you all for joining, and please look carefully at the report and please spread it amongst your contacts. Thank you.